weakness in the yen changing your view about Japan and the impact it is having on the nation's trading partners in the region?
Yeah, sure, absolutely. I mean, overall, for now, we think that the trade along Japan equity will continue to work well, at least until July and the election. Over the weekend, we got confirmation that the G7 is endorsing the BOJ policy, and so are the global investors, as we see the yen, the Nikkei is rising actually significantly. So overall, that rally in the Japanese equity will probably continue, especially that flow-wise, we're going to see actually money out of the JGB. It should go actually into high-yield equity, Japanese equity names. Does it mean that it's going to be negative to the rest of Asia? We don't think so. There is a positive correlation historically between the Japanese GDP growth and the Chinese GDP growth. If Japan is to basically gain some percentage of growth in the coming years, China will benefit to a certain extent. It could be, in no sense, in a ratio from 1 to 10. Let's say 1% increase in the GDP growth in Japan could create an extra 0.1% growth in the Chinese GDP in our assumption. If we talk about Korea, for instance, which is the main competitor to Japan, once again, we feel like we're going to have to look really closely sector by sector and corporates by corporates, because the context will be very different. Yes, a weak yen is negative to the auto sector, and a weaker yen will be even more negative to that sector, so we stay cautious on that segment. At the same time, in Korea, if you take a stock like LG Chemical, this is a company that imports raw material from Japan and they pay it in yen, which means that their cost is actually reducing. At the same time, they do not export to Japan, which means that they their profit don't get affected by that weak yen. So you've got Korean players which are actually net beneficiary of that weak yen. And so for that reason, between a petrochem company in Japan, which is importing as well, and a petrochem company in Korea, at the end of the day, the earnings trend will be more favorable to the Korean company. So once again, we would be relatively cautious and look on a corporate per corporate basis.
How are the recent weak data so far in China changing your strategy between domestic demand-driven and export-oriented sectors?
Well, historically, we always favored the domestic play in China in our investment, so that doesn't change very much the picture. You're right, the trade data are still relatively sluggish and uninspiring. At the same time, if you look at the monetary numbers and the M2 mass, which is growing actually and accelerating in its growth this year. If you look at the credit numbers, which are holding relatively okay, especially for the banking sector, these are positive signs. And in that respect, there is a chance to see a revival in domestic growth in China by the end of this year. And so this is the segment we would favor. At the same time, for the exporters, the situation is still complicated. Hard to tell, whether the US growth is sustainable, if Europe is going to awake. So in that context, yeah, we continue to favor domestic play. We see better reasons to maintain an overweight in the domestic play in China.